Robert, it's good to have you with us. A few years ago, an impressive lineup of economists, including the current chairman of the Federal Reserve, enthusiastically declared that the modern economic policy has found a solution to the problem of the business cycle, and that the recession became more of a nuance rather than a front-rank issue. The events of the last couple of years obviously have shown that they were terribly wrong. What's your explanation?
If you look at the range of mistakes that were made by central bankers, economists, regulators, banks over the last 3 to 4 years, I would highlight one particular problem, which is that 3 to 4 years ago, central bankers had as their mandate to target inflation, particularly the European Central Bank and the Bank of England. Central bankers took the view, and you had very clear statements, for example, from Alan Greenspan at the time when he was head of the Federal Reserve, that they were not going to target asset prices. Now, there have been a number of causes of the global recession and the financial crisis of 2008 until 2009. But one of the causes was the asset bubbles that were created in various real estate markets, and particularly the subprime market in America, but also asset bubbles in a number of European economies as well in real estate. And the fact that central bankers, I wouldn't say ignored, but were certainly not addressing the consequences of the deflation or the bursting of the asset bubbles, I think was a huge mistake. Another huge mistake was not focusing sufficiently on the impact of low interest rates, particularly in America, on credit creation. And obviously another problem that was the source of the global financial crisis was the huge expansion in credit for consumers. And that bubble, that credit bubble, obviously burst with very negative economic consequences.
Obviously, this is a time of great volatility in global markets, including in this part of the world. How do you characterize the current state of the global economy? Is the crisis behind us?
I think the crisis is behind us, and I would quantify that 2 ways. The first way is that I think the probability of the global economy returning to recession is very low. That statement, however, comes with a number of conditions, whereas I think that emerging market growth can be sustained for a number of years to come. There is a risk that the G3 developed economies either stay like Europe with a very low level of growth, or like America and Japan, that the current good levels of growth start to slow down, and we end up in the G3 economies with a 2 to 3 year period of positive but very mediocre growth. I think the second answer to your question is we have to look at systemic risk in the banking system. What is the risk of another major bank failure? And whereas I can see a number of problems in capital markets, whether it's refinancing in private equity, refinancing in real estate, the budget deficits of governments, the budget deficits in America of municipalities and individual states. Those are still major problems to be addressed. But I think the risk of another major bank failure, another Lehman Brothers, is now a very low risk.
I want to move to Europe.
Yes.
We have been following very closely what's happening in Greece, in Portugal, in Spain, Egypt, and as a matter of fact, this part of the world pays great attention to what takes place in Europe, simply because they are our biggest investment and trade partners. How do you see the situation in Europe? Is it under control?
I think you have got to look at 2 components here. The first component is the behavior of the European consumer. The European consumer is being very conservative. He is building up his savings. Now, in a way, that is actually quite positive for Egypt and other markets, because those European savings may not be invested in Europe. And those European savings could be channeled into Egypt and other regional economies. So if you like, that's the positive. The negative on that aspect, obviously, is this trend mediocre growth in Europe. The second issue is, what does Europe do with its budget deficit problem? Now, that budget deficit problem is not a problem in economies like Germany or the Netherlands or other well-managed economies like Finland. If you look at Greece, it's a major problem because debt is well above 100% of GDP, and the budget deficit is above 12% of GDP this year. Now, the reason why that is a problem is that you have to ask the question, can Greece refinance itself in the capital markets at reasonable interest rates? Recently, Greece had to do an €8 billion government bond issue, but at an interest rate close to 7%, whereas German interest rates for the same maturity are actually less than 3%. That interest rate cost just compounds the budget deficit problem. That deficit problem and the debt problem is extreme in Greece, but obviously we have budget deficits in Spain and Portugal approaching 10%. We have debt to GDP ratios approaching 100% in those economies. And for, I think, this debt to be financed, those governments have to come out very clearly with credible plans, not necessarily immediately, but over the medium term, on how they are going to address those budget deficits. And let's not forget that the European Maastricht limit for budget deficits is 3%. And with the exception of Finland and Luxembourg, everybody in Europe is well above that deficit. Now, you don't have to fix it in 2010, but markets will want to see evidence of those budget deficits being addressed at least on a 3-year time horizon.
Let's move to the United States for a second. Your visit to Egypt coincides with the passage of the healthcare bill. President Barack Obama, for all practical purposes, achieved a victory.
The bill was passed.
Yeah, achieved a victory when he, as a matter of fact, came very close to defeat.
Correct.
Does it change anything in the U.S. market? Are you still concerned about unemployment rates in the United States, the housing, submortgage problems? How do you see the future of the American economy?
The future of the American economy, unfortunately, will probably be a number of years of mediocre growth. Not a slippage back into recession, but growth of around 2%. And as you correctly say, there are some very substantive problems. Unemployment, currently 9.7%, is coming down, but it is coming down at a glacial pace. At the end of this year, unemployment in America will still be above 9%. At the end of 2011, at best, it will be at 8%. And that is, if you like, a dead weight on the economy. In addition, the banks' lending is now, after the bubble years, very conservative. If you look, for example, at the data for commercial and industrial loans in America, they are down very sharply. So for small and medium-sized companies in America, they are struggling to get credit. So another problem. The housing sector, which you mentioned, the bubble burst. I think that now we're forming a base in the housing sector, but the prospects for recovery are very limited indeed.
With the above in mind, what you said about Europe and the United States, it seems to me that the world economy needs new engines of growth.
Correct.
In emerging markets, probably China and India. And I was thinking also that maybe the Arab world, under certain conditions, can be, at a point of time in the future, that kind of an engine of growth.
Correct.
How do you see emerging markets' contribution to the world economy? Can they, in a way, replace the role that was replaced or fill in a vacuum that will be created, as you clearly outlined, by the United States of America's economic problems, by Europe's economic problems?
There is a fundamental shift in economic growth and what I would call economic power away from the old developed economy in favor of emerging markets. And I think that is a long-term shift. Clearly that is being led by Asia, and I think we will still get some impressive numbers out of economies like India and China, with growth probably averaging between 8 and 10%. If I'm correct, and the oil price averages $80 per barrel, liquidity levels in the Arab world will be very high, and I think that represents actually a very good opportunity for Egypt and other Arab countries. Now, if you look at Egypt relative to other Arab countries, I actually think Egypt has a very strong advantage because you have a diversified economy. If you look at the GCC countries, they are still very dependent on the energy sector. And obviously the opportunity for Egypt, if you like, is to broaden that diversification and to become, number one, a regional trade hub and possibly a global trade hub. Number two, to achieve regional leadership, if not in certain sectors, world leadership, in the sectors of the global economy, which are clearly going to be the lead sectors going forward.
If there is an issue that would keep you awake at night as far as Egypt is concerned, what would that issue be?
Well, I think there are a number of factors. There are structural factors like the need to continue to build out the infrastructure sector. And I think actually you should regard that as an opportunity, not as a negative. There is an opportunity to develop further, transport systems, energy systems, and I would also highlight the service sector of infrastructure, education, key sectors for the future for Egypt. Then if one looks at the macroeconomic side, obviously, Egypt still has a trade deficit, but I would hope over time that that would be addressed. And Egypt still has a still significant budget deficit. So, public expenditure needs to be managed carefully, and that's why the role of the private sector and why, for example, public-private partnerships, I think are a very critical area for the Egyptian economy, i.e. mobilizing private capital to take the dependency away from the public sector.
A fellow financial institution in Switzerland had just been in a case against the United States government, where the U.S. government, for all practical purposes, reversed years of Swiss banking secrecy.
Correct.
How do you see the impact of that on the future of private banking?
Well, I think two observations. The first observation is that where governments are under fiscal pressure, they will do everything to maximize tax collection. And therefore, I think that for at least the next 3 years, if not for the long term, we will see government action against private savings, which is booked in offshore centres, and that is, I think, inevitable. That means that the private banking market will probably move from offshore centres back onshore. And for example, Italy recently had a tax amnesty. I think many other countries are going to go down that route. Now, what that means for Egypt is actually you could again look at it positively, because it is an opportunity for the private banking market, not for Egyptians investing money offshore, but for Egyptians investing money here in Egypt.
Thank you, Robert. Robert Parker, Vice Chairman, Credit Suisse Asset Management.
Thank you.
Thank you, Robert.